Ladies and gentlemen, good day and welcome to RR Cable Limited Q1FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Ms. Darshini Desai from MUSG in Time, their investor relation. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone, and I extend a very warm welcome to all participants on Q1FY26 earnings conference call of RR Kabel Limited. Today on this call, we have Mr. Mahendra Kumar Kabra, Managing Director, and Mr. Rajesh Jain, Chief Financial Officer. Before we begin this call, disclaimer. This call may contain some forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not guarantees of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to Mahendra Kumar Kabra ji. Over to you, sir. Thank you.
I, Mahendra Kumar Kabra, on behalf of RR Kabel Limited, I extend a warm welcome to all of you joining us for our Q1 FY26 financial results discussion call. I am pleased to be joined today by our CFO, Mr. Rajesh Jain. It is an honor to address you for the first time in my new role as Managing Director of RR Kabel Limited. I would like to express my sincere gratitude to the Board of Directors and our leadership team for placing their trust in me. RR Kabel has built a strong legacy of innovation, resilience, and performance, and I am humbled to have the opportunity to lead the company into the next phase of growth. We are pleased to report that Q1 has been a strong start to the new fiscal year, marked by broad-based growth and operational resilience. Our business continues to benefit from sustained demand across key sectors, especially driven by infrastructure expansion, housing construction, and increased electrification efforts nationwide. These developments created a robust environment for wires and cables, and RR Cable has responded with agility and focus. The domestic market showed steady movement with deeper penetration in semi-urban and rural regions. On the international front, our export business continues to scale steadily, underlining our growing global relevance and competitiveness. We have enhanced supply chain efficiency and maintained product reliability, despite underlying commodity pressure, all while aligning with strategic pricing and procurement practices. Above all, what makes this quarter truly encouraging is the consistency across metrics, not just in top-line growth, but across every element of our financial and strategic metrics. This reflects our continued investment in automation, optimized production planning, operational efficiency, and execution. We approach the future with confidence and a clear roadmap for sustained growth and leadership in our industry. Thank you for your continued trust and support. With this, I'd like to hand over the call to Mr. Rajesh Jain to take this call further. Thank you, everyone.
Thanks, Mahendra. India continues to shine as one of the fastest growing major economies. The momentum is being driven by strong consumer demand, accelerating infrastructure development, and supportive government policies. These factors have created a favorable environment for industrial growth, and RR Kabel is proud to be contributing to and growing alongside this progress. I am pleased to report that we have delivered a strong performance across all areas of our business in Q1. Our distribution network has expanded further in Tier 2 and Tier 3 cities, which has helped us to increase our market presence and improve brand visibility in these regions. International market continued to shine with our focused efforts in Europe and Middle East delivering encouraging results. Despite fluctuation in commodity prices, there has been marginal improvement in the margins on YOY basis, supported by stronger purchase strategy, effective production planning, supply chain management, and efficient operations. Revenue from operations stood at rupees 2,058.6 crores in Q1 FY26, representing a solid 13.9% year-on-year growth from rupees 1,808.1 crore in Q1 FY25. This growth reflects healthy demand across our core product categories and increased traction in both domestic and export markets. While there was a modest sequential decline compared to Q4 FY25, this is largely attributable to seasonal trends and inventory normalization across channels. Our EBITDA for the quarter rose sharply to rupees 143.1 crore, up 50% from 95.4 crore in the same quarter last year, reflecting improved operating leverage and better cost absorption. The EBITDA margin also expanded to 7% compared to 5.3% in Q1 FY25, driven by efficiency gains and prudent cost controls. On the bottom line, profit after tax stood at rupees 89.8 crore, registering a significant 39.4% growth from rupees 64.4 crore in the corresponding quarter of the previous fiscal. This strong PAT performance underscores our continued focus on profitability and disciplined capital allocation. In terms of business segment, the wire and cable segment posted revenue of rupees 1,833.5 crore in Q1 FY26, up 16.2% from rupees 1,578.1 crore in Q1 FY25. The segment profit also rose to rupees 139.1 crore compared to rupees 113 crore in the same period last year. This performance was supported by modest volume growth and better realization. Geographically, domestic revenue grew mainly due to wire business, while cable remained subdued due to spillover impact. The FMEG segment narrowed its segment loss to rupees 7.1 crore from 20.7 crore in Q1 FY25, even though the revenue declined marginally to rupees 225.1 crore from rupees 230 crore on YOY basis, showing signs of recovery despite QOQ softness. Fan segment has underplayed due to early monsoon having a tad impact on overall revenue. We remain optimistic about this segment as distribution channels strengthen and product mix improves. We remain focused on building a responsible and future-ready business. The market outlook for the wire and cable sector is highly positive. With projected industry growth expected to outpace GDP, we believe RR Kabel is well positioned to capitalize on this opportunity. Structural reforms and government initiatives around electrification, smart cities, and renewable energy are providing strong long-term demand drivers. Looking ahead, our focus remains on strengthening our brand and making it a household name across the country. We aim to expand our product offerings to better serve industrial, residential, and commercial clients while continuing to grow our international presence and deliver on key projects. Thank you for your continued support, and we remain confident in our ability to deliver sustained value and leadership across the industry in the quarters to come. With this, I would request to open the floor for questions and answers.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. Please note that you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vidit Trivedi from Asian Market Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congratulations on great set of numbers. First of all, Mahendraji, congratulations on the elevation and all the best to you, sir. My first question is on the volume front. Could you please give me a breakup of the volume growth between wires and cables? And, given the margin expansion that we've seen in the EBITDA front, despite a moderate volume growth, was it because of the shift in the pricing strategy or a product mix?
Yes, so our overall volume growth is around 6.5%, where if we see in breakup, then wires grew by approximately 10%, while cable grew by 2%. And the in margin is as we are trying to improve our product mix towards higher profit products. So it's in trend with our planning and budgeted figures.
Got it. Sir. So second, on the capex front, you have already guided us that close to 1,200 odd crores will be spent over a course of 3 years. My question is that how long does it usually take to reach the optimal levels?
So first of all, this our capex of 1,200 crore over the next 3 years. So it is like sequential addition on yearly basis. It is like not overnight we will get all the capacity at one go. So it is like we have planned in such a way that as we keep getting capacity and we keep improving in our demand and sales scenario, so it will match as per demand, and it will be like gradually in line with our overall expansion plan and growth plan.
Got it, sir. That's helpful. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Praveen Sahai from PL Capital. Please go ahead.
Yeah, thank you for opportunity and congrats for a good set of numbers. First question is related to your guidance of 18% of a volume growth for FY26 and also the margin improvement, EBIT margin improvement of around 100 basis points for this year. This lead to an ask rate for the next 9 months is quite a higher. So would you continue with such guidance or there is any revision, and if then how you are expected to report such a high volume growth?
So Praveen, yeah, this our 18% volume growth guidance and 100 basis points improvement in our margins is intact, and we are hopeful to achieve the same figure because the growth already we have seen 40 basis improvement in margins, and even volume front, like as we are expanding our capacities, and it is we are quite confident to get the guided figures. Overall, already as you have seen also, always the H2 of year remains very strong in this industry, and it is as per our budgeted and planned figure only.
Okay, sir. And next is, as in the last 2 years, you had to build the cable capacities as well. But so far we had not seen your mix, wire and cable mix has changed any bit. So do you see in this financial year there would be any shift towards a cable in the mix?
So our high growth will come from cable segment only, and as already in past also we said that within wire and cable is expected to grow at industry level also, and for us particularly more because earlier we were having limited capacity, and now as we have built the capacity also, we see a good demand also in domestic as well as export market. So you will see higher contribution from cable segment in coming quarters.
You are still at 70-30 mix, right, sir?
Yeah, so it will gradually change. Looking to our very high base in wire, so still I think after 3 maybe after 3 years it may tilt towards 60-40 or maybe 58-42 type of movement.
So next question related to FMEG. When you are expecting a break-even in that, and how much is the growth expectation for this year?
So if you see in this quarter itself, like our losses have reduced by almost 600 basis, 550 to 600 basis points. And though we were targeting early like break-even, but as you have seen, this quarter was not that much good. So now we are expecting that within this year we'll be at, on yearly basis, we will be at a bit positive in FMEG.
Okay, and growth, sir? How would be the growth?
It's like around anything between 20 to 25% growth we are expecting in our FMEG business.
Okay, and last question related to your creditor days, which has reached to around 40 days. So, is there any arrangement, anything changed in that, which has a gradual increase from quarter on quarter we are seeing there?
So, like in our cases, the major raw materials are copper, aluminum, and then we have like some imported material also, where we are using LC facility in effective way. So our creditor days have increased.
Okay, and will maintain at this level?
Yeah, almost this level will be maintained. So as of now, we have already improved and got a very good working capital days, and we'll try to maintain those days.
Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hi, team. Thank you for the opportunity. My first question is on cables. So, in this quarter, you saw about just 2% volume growth in cables. But you also said that there was some spillover impact. So if you could just quantify what was that impact in numbers, please.
Yeah, so two things happened in this quarter through. First, April was not that much great in terms of cable, and later on, a few big projects which are going to delivered in second quarter. So we could not achieve that kind of volume growth in Q1 itself. But as a growing business and looking to my overall order book current quarter, we are on track with our overall growth plans in cable.
So basically, 16 to 18% largely will be driven by cables, and who have the visibility in terms of order book in that sense.
Yeah, so looking to this cable business segment, even if I can give you further breakup, like we are expecting around 10 to 12% growth in wire and 25% growth in our cable business.
Okay, get it, sir. And sir, incrementally over the next 3 years as cables capacities ramp up, just wanted to understand on, if you can just give some color on the approvals. So given the fact that cables is a very approval-driven system, do you have the approvals or say on a scale of 100, where you are in terms of the approvals in the cables business? So because next 3 years, incremental growth will come through cables.
So like since we are already in this business, though our scale is not that much yet, and we have received meaningful approvals also, and this is like continuous process. As I will keep adding my capacities, at the same time my approval process is also continuous. And good thing is that since like already we have got approval from few of the utilities, now it is like just keep that pace going, and we'll keep adding approvals quarter on quarter basis.
Okay, get the point, sir. And sir, you've spoken about 100 basis point margin improvement. While we've seen margin improvement in this quarter, but given the fact that the growth incrementally will be driven by cables in this year as well, would the mix not be adverse for RR Kabel in this year?
No, it will not be adverse because the overall, since our margins are in lower side, and now we are expecting even with cable, once I get the scale, once I improve my availability, then cable margin itself will improve. And it will like higher than my average margins only. So it is not dragging my margin, and it will help me to improve.
Got it. Thank you so much, and all the best.
Yeah.
Thank you. The next question is from the line of Achal Lohade from Nuvama Institutional Equities. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Sir, if you could talk a little bit on the export part, what has been the volume growth, and were there any deferment of the, orders in terms of the shipments? Could that also be a reason for the slightly lower growth compared to the peers?
No, so we have seen a very good growth in our export business in this quarter. And if I bifurcate between domestic and export, then we have seen higher growth in terms of volume in export business. At the same time, till now we have not seen any impact. We have good order book from our all customers. Our majority of the export is still in Europe and Middle East, though we are exporting few quantities to US also, but still things are not clear at their end, and it will be too early to comment anything on that. But as of now, it does not have very big impact or any impact what we have seen till now in my export business.
And in your guidance, are we budgeting the export mix will remain similar, or could there be a higher delta in terms of the export mix?
Also, we are targeting both the markets, be it domestic or exports. But in exports, the bigger change is that now we have got few approvals for our cable segment also, and as my cable capacity is expanding, so my export will have also higher share of cable exports. At the same time, there may be 1 or 2% here or there, but both we will try to have growth in both domestic as well as export market.
Got it. And just last question, if I may, sir, just a ballpark number in terms of the EBITDA margin or EBIT margin for, say, export cables, export wires, domestic cable, domestic wires. Just a ballpark number, if you could, sir.
So, it is in line with our earlier quarters only. As we have told, in domestic wires we have higher margins, while in domestic cable we have less margin because I have very low base and my delivery cycle and still waiting time is a little bit higher. But once I improve the scale, and then it will help me to improve the margin. On export, it is other way around. Wire is considered a little bit simpler product, so we have lesser margin, while in cables we have higher margins. And here we are improving our cable export, so again this will help me to improve my overall margins.
But if I were to just ask, sorry, I'm asking a bit more nuanced question here. In terms of the margins, would domestic wires be the highest margin segment within these four, or it will be the export cable margin will be the highest? If you could give
Both
some
are almost similar. I can
okay.
Inform in domestic wire and export cables, margins are in the range of 12%.
Okay. And how about the other two, sir?
Other two is as of now, in export wires, we have margins of around 5%, while in cable, still we are in the range of 6 to 7% only, domestic cable.
Understood. And just last question with respect to, the cables expansion. Can you help me understand, the cables growth appear to be very low, 2%, while we are adding capacity. So is capacity was a constraint for the last quarter, or how do we see this, when you are guiding for a, 25% kind of a volume growth in cables?
So as I explained, particularly in this quarter, in April month, it was starting of the year and demand was a little bit slower, but later on we have very good demand, and the only thing, few of the big orders which were supposed to be delivered in the month of June could not be delivered, and they are executed in this quarter. So you will see the impact of that growth in this quarter.
Understood. Could you quantify how large would that be, sir? In terms of
that will be in that answer will remain in that only now, as we are targeting 25% growth in cables. So on quarterly basis there may be some variation, but overall we will see this growth.
Understood.
In next 3 quarters we'll make up this.
Understood. That helps, sir. Thank you so much. Wish you all the best.
Okay.
Thank you. The next question is from the line of Natasha Jain from Phillip Capital. Please go ahead.
Thank you for the opportunity and congratulations, sir, on a good set of numbers. My question is more export-based and more macro-based rather. The tariff that's there on copper, so can you just help us understand, is it like a blanket tariff both on wires and cables, or does this supersede the existing country tariff? So first question is that.
Natasha, still things are not very clear, and what we could understand, and even we have not could achieve any, we could not receive any feedback from our customers also. So, though by plain reading it seems the tariff is very high, apart from general tariff of 25%. It seems they have imposed a custom duty of around 50% on copper products, which includes wires and cables both.
Got it. So, maybe I'll ask this the other way around. So even if I just assume that it's a 50% flat tariff, irrespective of the country tariff, because if I see country tariff, we are at a disadvantageous position now because I think South Korea, Vietnam, Japan, Germany, all of them have lower tariffs than us and they are bigger exporters to the US. But if I just consider 50% tariff, so do you think, is it possible for any company in the Indian space to pass on that kind of tariff? If not, then do you think eventually this will become a very volume-driven market for us? And whatever we said that US is a high-margin market, does that then slowly taper off? Because then you will have to probably eat up your margins a little and just play on volume. Do you see that happening in the future?
So there are 2-3 parts in your question. First part, if I consider if it is commodity-based tariff, then it will make things on equal ground for India as well as with other countries. Secondly, if India-specific duty is higher other than other countries, then there may not be that much viability in that market. But at the same time, we are not only in copper export, but since we have aluminum cables also, which what we are exporting now. Right now we are doing only copper, but now we are exporting cable made of aluminum also. So that will maybe that can make more competitive. And at the same time, here I would also like to give an explanation that since the overall we have 30% export, and out of that around 8 to 10% is at USA. So overall, I have around 2.5% exposure to US market. At the same time, we have huge opportunity in other countries. Good part with us that since we are largest exporters, I have so many countries presence in so many countries. So I'm not dependable on only 1 or 2 countries. And this gives me a good opportunity to cover either by new geographies or same geography with additional business and new products also. Like now when we are expanding our cable capacities, this will help me to grow my export business.
Got it, sir. Just one follow-up on that. So do you also see a possibility of dumping happening in other geographies and that probably eroding anybody's competitive advantage in other geographies barring US?
No, I don't think so. Though it is pure, right now it is like guesswork only. Since we are still not very clear how US will behave, so it will be too early to comment anything on that.
Fair enough, sir. Sir, just one last question on FMEG. Your numbers have, at least your degrowth was comparatively lesser to your peers, given the fact that you are still indexed very highly to fans. And your growth guidance is also strong here. You've had good margin, at least your losses have compressed. I want to understand what product category within FMEG helped you kind of contract your top line growth to just 2% versus peers at double-digit degrowth? What parts moved there?
So yeah, 2 things are important. Like fan is contributing almost 50% in my FMEG business, while lighting is around 30%, appliances is around 10%, and rest is switchgear. Within fan, since now we are not only in economy range, but we have introduced premium, mid-premium category. We are getting good market share in that. Like in my overall sales, we are getting 20% revenue from premium products. So this is like improving my visibility and also improving our margins, and we are doing better than our peers.
Understood, sir. Thank you so much and all the very best.
Thank you. The next question is from the line of Rahul Agarwal from Ikigai Asset. Please go ahead.
Namaste, sir. Good afternoon. Sir, 2 questions. Firstly, on the domestic side. On the wires, right? I mean, how would have the markets behaved? If you could share some color on the entire quarter. I understand April was weak purely because of copper volatility, but overall for the quarter, between your core markets, weaker states, new markets where you're entering, if you could give some color on how is the demand shaping up, what are the new product launches happening on the wire side? Is there also the mix is improving on the value-added side? And you also mentioned distribution in Tier 2, Tier 3. If you could cover that as well in terms of overall domestic market for wires, that will be helpful, sir.
So Rahul, as rightly pointed out by you, we have done better in this quarter in domestic wire segment. And as we are already very strong in our north and western part of the country, so though we are opening up new markets also, and they are doing very well in south and eastern part of country also, but still since base is very small, so overall it seems like reasonable growth only. But as per our plan, we are slowly and steadily we are expanding our distribution base all over the India. And just now it is matter of time how I improve the depth of my overall markets.
Sir, is it possible, you mentioned overall volume growth for the business was 6.5, wires was 10 and cable was 2. Is it possible to know domestic wire volume growth and domestic cable volume growth, if it's possible?
So in domestic cable, like we were on little bit on negative side. So whatever growth we got in domestic was majorly driven by our wire growth only. So exact numbers I do not have readily available, but so majorly driven by wire, and cable was only growing to some extent in this quarter.
Got it. So, sir, when I'm benchmarking it to other peer sets, right, I mean, I understand there is some spillover on cables. I don't know whether that's domestic or export, but I'm assuming that's export. If you could clarify that. And overall, for domestic...
Sorry, that is on domestic. Just I would like to clarify that is on domestic side only, where few of my orders could not be executed in those quarters, and that is the reason it on prima facie it seems on degrowing side. But overall, looking to my production and overall demand facility, we are on positive and planned figures only.
Yeah, okay, got it. So, we've already, July is already finished. Is that entire spillover already taken care of, or is going to be more spread over?
So I could not comment on current quarter, but as already told, we are quite confident to get that 25% kind of volume growth in next 3 quarters. So it itself extends the situation.
Got it. And just to come back on the previous question on the domestic side, it looks like peers have done much better. If any comments on market share, or is it more to do with just seasonality and some bit of up and down on the volatility? What is this? Why is this number so low for RR Kabel?
So, overall, as in the beginning also, I said that we are planning to grow around 12% in wire and 25% in cable. So, we are in that line only. Since we are wire heavy company and more growth is coming from cable, so the major growth will be seen in the coming quarter.
Okay, sir. Got it. Thank you so much. And Mahendraji, best wishes for the role. Look forward to interact with you very soon. Thank you and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, please. Go ahead.
So my first question is with respect to copper prices. So with current copper prices increasing during this particular quarter, can we expect margin pressures in the coming quarters?
No, so see, copper volatility is part of our business, and as you are aware, this is there is a mechanism where we keep passing on the prices to our consumers based on the whatever there is upward or downward trend. So it is a continuous cycle.
Okay, So I just wanted to clarify this particular part. So it's easy to pass on the prices to the customer, right?
Yeah. So, whenever there is like, say, plus or minus 2 or 3% variation in our copper prices, then we change our selling prices also. So it could not be done on daily basis since we are in B2C category. So what happens at industry level, like we see and observe the price trend of last 15-20 days and change our prices, selling prices also.
So, basically the price relocation happens every 20 days, like every month?
Sorry, your voice is not clear. Can you repeat, please?
Is it clear now? Hello?
Sorry?
Yes, now it's clear.
Hello, is it clear now?
Yeah, please. Now.
So I just wanted to clarify that you basically do the price readjustments every month based on the copper prices.
So it's not every month. It is depends on the fluctuation in copper prices or raw material prices. So sometimes it may remain same for 2 months also, and sometimes there may be 2 price revision in the same month also. So as I informed that it is based on or depends on the fluctuation in your raw material prices.
Okay, sir. And my second question is with respect to you giving us a guidance of 25% growth in terms of cable volume, mainly because there will be a cable capacity coming online in the coming quarter. I just wanted to understand what is the current manufacturing capacity of cables and what will be the manufacturing capacity of cables by the end of this year.
So as of now, my cable is contributing 30% in my overall revenue, while wire is contributing 70%. And as we are telling, if I grow by 25% in cable segment, then this ratio may go in 32 or 35% by year end.
No, I just want to understand the manufacturing capacity. What's the current manufacturing capacity of cables versus how much manufacturing capacity of cables will be coming by the end of this year? Only with respect to cable.
So like right now within cable also we have industrial cables, LT cables, ST cables. So and capacity is quite fungible also. By like whatever capex plan we have done, like whatever capacity we were having at the end of 23, now we are almost doubling our that capacity, and with new
doubling the capacity.
Yeah, doubling the capacity, out of which few have already been added, few are in the process, and at the same time new capex again we are doubling whatever capacity we have. So you exact.
So my
well, I cannot give figures exactly in tonnage.
Yeah, I understood. I just wanted to clarify. You're basically saying whatever was the cable capacity at the end of 2023, you are doing 2x by the end of this year, and then within the next 3 years, you will do 2x of that.
Yeah, exactly. That is our plan.
Oh. Sorry, come again. You said something?
That's what we have planned to expand our business.
And sir, currently the exports are contributing about 30% of your total overall revenue. Going forward, because we are seeing a huge demand from, Australia and Europe in terms, because they are doing various grid upgradation, So do you expect this percentage of exports to improve further?
Yeah, so this ratio may be vary by 1 or 2% on quarter-to-quarter basis, but at max it can go up to 35% because we have equal focus on our domestic market as well.
Okay. Thank you, sir. I will rejoin the queue if I have any questions. Thank you so much.
Thank you. The next question is from the line of Mehul Mehta from Choice Institutional Equity. Please go ahead.
Good afternoon, team. My question is related to capacity utilization. At the end of Q1, what would have been capacity utilization for cable and wire separately?
So in wire, we are at around 70%, while cable, we are already at 90-95%.
So that is similar to what we are having at Q4 end, is it?
Yes. So if you see, our growth is like on similar trends only, and planning is also to grow in like that way only.
Okay. And is it like in terms of cables, like, whatever capacity expansion, whatever CapEx we have incurred of about 5 billion in the past 2 years, so that will be commencing in quarter two, is it correct?
No, no. Already few part of that was operational in last year, few part is operational in this from April. So it is like continuous process. Yeah, as I told in beginning also, whenever we do CapEx, it is not like white field project where all capacity will be added on one night. It is like modular expansion where we keep adding few capacities and on like quarterly or half yearly basis. So this is continuous process.
Understood. And in terms of CapEx during the quarter one, what would have been CapEx incurred by us so far?
It may be around in the range of 50 to 75 crores.
50 to 75 crore. Okay. And I believe some about 150 crores you were to incur for expanding capacity and post that 10.5 crores. So what has been so far incurred on 150 crores?
I'm not sure which 150 crore you are referring.
You said 1,200 crores is total capex which will be incurred going forward. So out of that 150 crores separately and 1,050 crores at I think Waghodia. So at Silvassa I think 150 crores. So I have out of this what would have been incurred in terms of 75 crores. It will be on Silvassa part or both put together.
That was measured. So when you are referring that 150 and 1,200 crore, 1,050 crore, that is based on location, which is Silvassa and Waghodia. In Silvassa, now currently expansion is going on Silvassa, where we are completing the project which was part of my last expansion. And even at Waghodia also the cable expansion, what is going on continuously, and few of the capacity will be added in this quarter. So it is mix of both the projects.
Thank you and all the best.
Thank you. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for taking my question. Sir, regarding FMEG, right now we are doing improvement by doing cost reduction initiatives. So what are the key hurdles in terms of distribution, brand recognition, pricing pressures? So which are the where we are lagging, and what are the strategic initiatives we are taking to be profitable by end of the year? And secondly, I think what are the around 20% of revenue comes from premium products. We go to a broader mix of premium, mid-range and standard products in that FMEG segment.
So in FMEG, we have done in previous 2 years, but even in this quarter also, see, it is like, if you see, one was a better product mix. Second, if you see, we have done better than industry in terms of growth also and in terms of profit improvement. Rather, in our case, it was reduction in losses. And in last year also, we reduced on yearly basis, we reduced our losses by almost 400 bips. And in this quarter, when I compare with quarter on quarter, then our improvement is around 550 bips. These are driven by, one is scale. As we are getting more and more scale in my FMEG business, the cost is being absorbed on higher basis. Second, product mix is changing, and if you have to make profit in FMEG, then the revenue must come from premium and mid-premium category. And fairly, we are doing good when our 20% of revenue is coming from premium products. And at the same time, we are improving our sales prices, we are improving on cost front, and this is resulting in higher growth and reduction in losses.
Sir, secondly, as per industry report, around 40% of revenue, 40% of demand majorly comes from real estate side, and how our products are majorly into whether it's a residential or commercial focused, and secondly, how these renewables and data centers are growing as per our business, and what kind of contributions we can expect in these segments.
So when we talk about, I think you are referring to our wire and cable business. So in wire and cable business, majority of the growth comes from construction, be it residential or commercial properties. So growth is coming from all the segments, and but now we are more hopeful and we are confident that more growth will come from infrastructure, data center, export business. Our cable segment is expected to do better. Even at industry level also, the same thing is expected. That even if wire may grow at 10% and cable may grow 15-16% at industry level, so that this industry can grow at 13 to 14%.
Got it, sir. Thank you.
Thank you. The next question is from the line of Nikhil Purohit from Trident Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question is, can you tell me the current capacity across Waghodia, Silvassa, and Roorkee, and their current utilization levels?
So we have two plants of wire and cable. One is at Silvassa and other is at Waghodia, while Roorkee, Gagret, and Bangalore are our FMEG plants where we are producing fans and lights. As I told, in wire and cable, like already in wire we are at around 70 to 75%, while in cable we are at 90 to 95%. Most of the wires are got produced at Silvassa only, while at Waghodia we have both wire and cable. At fan, it is seasonal product, so capacity depends on season to season. Sometimes it is at 100% also, more than 100%.
Understood. And could you just update me with the current capacities at Waghodia and Silvassa particularly? Not the utilization, the current capacity.
Capacity, sometimes it may be very tough because it depends on product to product also. We have quite fungible capacity where wire capacity can be used for industrial cables also and something like that. So it may not be that much particularly I can give the figure. But yeah, more or less I can say almost 30 to 35% capacity is at Silvassa, while at Waghodia we have around 65% capacity.
Got it. And sir, just wanted to confirm, what is our full year guidance for CAPEX this year?
It may be in the range of around 300 crores.
300 crores. Okay, got it. Thanks.
Thank you. The next question is from the line of Natasha Jain from Phillip Capital. Please go ahead.
Yeah, thank you for the follow-up. Sir, just wanted to understand, are we completely into distribution cables or do we also supply a little bit of transmission cables as well?
No, it's a combination of both, distribution and transmission, both. So we are not in conductor business. We are purely in HT and LT power cable only, which range up to 66 kV.
Got it. Sir, just a broader question here in terms of industry understanding. So for transmission, the cabling which is underground would be very high voltage, right? It would be classified as EHV, or would it still come as high tension?
It will be a combination of both. EHV will be at a higher level, it will be at EHV, but then when it will be further distributed, it will convert to HV also.
Got it. Thank you so much. So we are present in both HV on the transmission as well as the distribution power cables.
Yes.
Got it. Thank you so much, sir.
Thank you. The next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Thank you for this opportunity. I just wanted to understand this rupees 1,200 crores capex. What will be the asset turn on this?
So with this, we are expecting top line of around 4,500 crores at full operational level.
4,500 crores.
Yeah, because this is a combination of wire and cable both.
Okay, sir. Thank you, sir.
Thank you. In the interest of time, that was the last question. I would now like to hand the conference over to management for closing comments. Thank you, and over to you, sir.
Yeah. Thank you, everyone, for taking some time out to participate in this call. In case of any queries, reach out to our investor relationship agency, MUFG Investor Relations. We wish you all the best and hope to interact with you soon. Thank you so much.
On behalf of RR Cable Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.